It seems like the solution to unaffordable housing should be simple. Just build more homes. And actually, we have been. New housing construction in the U.S. is now reaching levels we haven't seen since before the 2008 financial crash, even though the cost to build has gone way up because of broken supply chains and rising material prices. The problem is that while we have been building, we haven't been building the right kind of homes. As costs climbed and profits dropped, developers focused on what still made money: luxury housing. This has led to a strange situation where it looks like there are a lot of new homes available, but the ones being built aren't affordable for most people. You might think having a lot of new housing sounds good, but in reality, we're still short about 4 million homes, based on most estimates. If developers can't sell the luxury homes they've already built, they're even less likely to build the affordable homes we actually need. Landlords are left struggling, and renters could face homelessness unless something major changes soon. Take Palm Beach, Florida, for example. The luxury rental market there is crashing, even though landlords have invested millions of dollars. Across the country, half of renters are now paying more than they can afford. Many landlords are close to going bankrupt. It's important to note that we're building a lot of apartments right now. 2 years ago, we even broke the record for the most new apartments built in a single year, breaking a record that had stood since the 1970s. Back then, baby boomers were looking for cheaper homes near city centers rather than in the suburbs. Government programs helped by offering subsidies, so developers always had people to sell or rent to. That big construction boom eventually ended because of economic troubles like the 1973 recession, the oil crisis, and growing international competition. When the market recovered, the demand had changed. Boomers were moving out of apartments and into bigger suburban homes. What's interesting is that property construction usually responds to the economy faster than economists can even predict. The current building boom started after the 2008 crash. Apartment living became more attractive again, especially for dual-income households without kids. These couples had more money to spend and wanted low-maintenance homes. Developers realized they could charge higher prices by making apartments look expensive, even if they weren't very different from cheaper ones. Flashy designs and materials that looked luxurious were cheap to install, but made the properties much more profitable. Developers loved the fact that small changes, like fancy countertops or a gym room, could make apartments seem high-end and boost the selling price. Low interest rates also made it easy for builders to get loans to fund these projects. Although construction slowed a bit around 2016 when rates rose, everything changed when COVID-19 hit. At first, global lockdowns made building difficult, but soon new factors made apartments even more desirable. People started moving to different cities to work remotely, and with stimulus money, cheap borrowing, and rising asset prices, developers saw a big chance to make money. Luxury apartment buildings popped up everywhere, often with flashy ads to attract renters and buyers. The most important part? Developers didn't need to keep these buildings. Once apartments were rented out, the entire building could be sold to a financial company that would package it into a real estate investment fund, called a REIT, and sell shares to investors who wanted real estate exposure without the headache of managing property. This system encouraged building, but there was a catch. Once the building was rented out and sold off, the original developers and builders no longer had any reason to care about what happened to it. Not surprisingly, a lot of these luxury apartments turned out to be not so luxurious after all. Still, these projects supported millions of jobs, from architects to electricians, and banks poured tons of money into them. But there's a long-term risk. These buildings need to last for decades, and many aren't built to high standards. What's also clear is that much of this new luxury housing isn't really luxurious. It's just expensive. In suburbs across America, huge but cheaply built homes have existed for years. These McMansions are big and flashy, but often made with low-quality materials to keep costs down. They give buyers lots of space at a low cost per square foot, but they're expensive to maintain over time. Recently, rising material costs have made even these cheaper to build, and now the trend has shifted to apartment buildings. These apartments are like McMansions in the sky: big, expensive, and often poorly built. At the very top, you have super luxury towers like 432 Park Avenue in New York, where apartments sell for tens of millions. Below that are new developments in many big cities, offering homes priced between $1.5 million and $10 million. The biggest group of new apartments, though, are mid-rise buildings designed as investment properties. These are built cheaply but sold or rented out at high prices. Changes in building codes made it easier to build these mid-rise apartments, with a ground floor for retail stores and several floors of wood frame apartments above. These mid-rise buildings are some of the cheapest types of structures to build per square foot, and they've been extremely profitable. They also offer extra rental income from the shops and businesses on the ground floor, which adds another stream of money that doesn't depend on the housing market. However, there are two major problems with these new buildings. First, the people actually living in them are far removed from those who built or own them. Developers usually hire builders, who then hire subcontractors, and by the time the building is finished, it's often sold to a financial firm, which bundles it into an investment fund, which is then sold to retirement funds, and finally to everyday investors. This financial chain means that nobody feels truly responsible for the building's long-term quality. Even ultra-luxury towers like 432 Park Avenue have faced major issues, sparking lawsuits over who should fix the problems. Wealthy buyers can afford to sue, but most people can't. The second problem is that high-density housing needs strong city services: roads, garbage collection, schools, and emergency services. These are paid for by the city, not the developer. While apartments are more efficient than suburban sprawl, they still put short-term strain on local budgets. But the biggest issue is that many people simply don't want to live in these luxury apartments. For example, a 4-bedroom apartment in the city is often priced like a luxury penthouse, even though a 4-bedroom home in the suburbs is much cheaper. This mismatch has led to developers offering deals like months of free rent or expensive gifts to lure renters into signing leases. You might think, why don't they just lower the rent? The reason is financial. Buildings are valued based on how much rental income they generate. A high rent on paper makes a building look more valuable, even if landlords are giving out free rent for part of the year. This helps developers sell buildings at a higher price to investors. Investors know these tricks, but they don't mind. Once people move in, it's hard and costly for them to leave, so the buildings keep generating income. What's worrying is that many of these developers borrowed money when interest rates were very low. Now, with higher rates and loan deadlines approaching, some could face big financial trouble. It's disappointing because medium-density housing, like well-built apartments, could really help solve housing problems and cut down on endless suburban sprawl. But instead of doing it right, we've made a mess of a good idea. Thanks for watching InvestingFlix. If you found this video helpful, don't forget to like, share, and drop a comment below. For more expert insights on personal finance, investing, and wealth building, hit that subscribe button and turn on notifications so you never miss out.